Okay, let's just imagine for a second. It's the year 2026, and there is a massive shift happening in the world of finance. A whole new type of investment fund is just exploding in popularity. And get this, every single decision is made by artificial intelligence. And no, this isn't science fiction anymore. This is the robot revolution, and it's coming straight for your portfolio.
It all really boils down to one simple but kind of profound question. Could a robot, an algorithm, actually manage your money better than a human can? I mean, that's a pretty bold idea, right? So in this explainer, we are going to break down exactly how this whole thing works, and more importantly, what it could all mean for you.
All right, so before we can even try to answer that big question, we've got to get on the same page. Let's start with the basics. What exactly are we talking about here?
So, an AI-managed ETF. Think of it like any other exchange-traded fund, a basket of stocks, but the big difference is who's in charge. Instead of a person, it's a computer program. It makes every single call to buy or sell. And that's the key part right there. There's no human fund manager sitting in a corner office picking stocks based on some gut feeling. Nope, it's all just code.
And I really want to stress this. This isn't some niche, futuristic concept we're talking about. In the world we're exploring today, this 2026 scenario, this is totally mainstream. We're talking billions with a B. Billions of dollars are flowing into these funds because investors are desperate for any new edge they can get.
Which, brings us to the million-dollar question. Why? Why is this all happening so fast? Let's dig into the advantages that are convincing so many people to trust a robot with their life savings.
And when you put them side by side, the difference is, it's stark. On one hand, you've got human managers. We're smart, sure, but we're also emotional, right? We get scared during a downturn, we get greedy in a bull market, and it takes us time to analyze everything. But then you look at the AI, it's just pure data. It reacts instantly, the second a news headline drops, and the whole system is built to keep fees low. It's just a totally different way of thinking.
So really, it all comes down to a few main goals. The big promise here is, number one, get human emotion, that fear and greed, out of the picture. Number two, process an insane amount of data. News, reports, social media, way more than any human team could. And do it all faster and cheaper. The ultimate goal? To find those little hidden gems, those opportunities in the market that a person might just completely miss.
Okay, so this all sounds great in theory, right? But how does the AI actually do it? How does it trade? Let's pop the hood on this black box and take a peek at what's really going on inside.
Well, it's basically a constant, never-ending loop. First, it just drinks from a fire hose of data. It collects everything. Then, it actually reads and understands all that text to figure out the market sentiment. Is it positive, negative? From there, it gives every single company a score. And then comes the easy part. It just automatically buys the stocks with high scores and sells the ones with low scores. But here's the real magic. Step 5. It learns from every single trade it makes, good or bad, so it's always getting smarter.
So inside that loop, the AI's brain is just humming along, making these incredibly complex calculations. I mean, it's not just blindly buying and selling. It's actively hunting for weird things in the market, like unusual price drops. It's ranking hundreds of potential stocks against each other. It's even figuring out the exact number of shares to trade for the best outcome. And don't worry, it's not the Wild West. Humans still set the ground rules for risk, and the system even spits out reports that tell you exactly why it made the trades it did. Okay, so we've covered what these things are and how they work. Let's bring it all back home now to what really matters. What does this new AI-driven world actually mean for your money? For you, the individual investor, the practical benefits are actually pretty compelling. First off, they're easy to get. You can buy them through your normal brokerage account just like any other stock. Second, the fees are usually way lower than what you'd pay for a traditional, actively managed fund. Plus, your portfolio is reacting to news in real time, literally the second it happens. And maybe the coolest part, you get access to these super complex trading strategies that used to be reserved for, massive hedge funds.
Okay, I know what you're thinking. This all sounds a little too good to be true, doesn't it? So we have to ask the obvious question. What's the catch? Because with any powerful new tech, there are always risks.
And we're not talking about small risks here. These are significant. For example, what if an AI gets fooled by some fake news online and makes a disastrous trade? Or what if all the AIs see the same scary signal at the same time and all decide to sell? Boom, you could get a flash crash. Then there's the black swan problem. These AIs learn from history, so what happens when a crisis hits that looks nothing like anything that's happened before? They might not know what to do. And of course, you've got your classic tech problems, software bugs, cyber attacks. These are really serious things to think about.
So you can see this is way bigger than just a new type of fund you can buy. The sheer scale of this change, all those billions of dollars moving away from human managers and into these automated systems, it's completely rewriting the rules of the entire stock market.
And you can actually see the dominoes falling, that chain reaction playing out. Trading volumes are just skyrocketing. A piece of news affects the stock price in seconds, not minutes or hours. The old, traditional finance firms, they're being forced to slash their fees just to stay in the game. In theory, all of this makes the market more efficient because any tiny pricing mistake gets corrected almost instantly.
And all of this leaves us with one final massive question to chew on. When you have a market where every single trade is instant and every decision is supposedly perfectly data-driven, what happens to the market itself? Does it become this perfectly efficient, stable machine? Or does it become something way more fragile and a whole lot more unpredictable? Honestly, that is the trillion-dollar question that we are all about to find out the answer to.